Hey, what's up everybody? Michael Smith here with the Bluefield Group at Keller Williams. Hope you're having a great Monday. Just wanted to touch base with you and give you a real quick market update Monday so you keep an eye on what the market's doing and where we expect it to go from here. So that being said, let's go ahead and dive into some statistics. This is released by the Greater Greenville Association of Realtors. These are numbers from January, and we've got a 24-month rolling period here, so we have some context to compare it with. So we've got a bunch of data points here that we can go through. The first one is new listings, and this is comparing January of 2018 to January of 2019. So we can see that in January of 2018, about 1,300 new listings came on the market. In January 2019, 1,436. So that number is up almost 7%. So about 7% more new listings came on the market than what happened this time last year. Pending sales is down 51.8%, which is a huge drop. January of 2018, a little over 1,000 homes went under contract. January of 2019, only 502 homes actually went under contract. This is a dramatic decrease, so something we're definitely going to be paying attention to over the next few months to see this part of a longer trend. Next is closed sales. Closed sales also took a drop in January, down 20% from this time last year. So in January 2018, 814 homes actually closed. January of 2019, we've got 651 homes that actually closed. And if you look at the pending sales from December of 2018, you can tell that the pending sales in December was really down as well, which is what led to such a drop in closed sales in January. There typically is a 30 to 60 day lag period from pendings to close, depending on things. So what we can expect, since pendings are so down this month, we're expecting to see closed sales down next month as well. Days on market, this one is really important to keep track of. This is the amount of time on average that it takes homes to go under contract from when they're listed. This has ticked up a little over 12% from this time last year. So January of 2018, the average days on market was 56 days. January of this year, it went all the way up to 63. So again, 1 month does not make a trend. These are numbers that we're going to be paying close attention to over the coming months, because that could really tell us a lot about where the market is going on a macro level. All right, so good news is median and average sales price are still up. So prices are still appreciating, properties are going up in value. Compared to January of last year, the median price is up almost 10%, the average price is up 4.7%. And again, this is Greenville, Greater Greenville Association of Realtors. This is mostly Greenville County, a little bit of outliers here and there. Percentage of list price received, this one is interesting. So this is going down. This time last year it was 97.6%. January of this year we're down to 97.3%. So a little bit of a dip. This is the percentage of asking price that the home actually ends up selling for. So as the market starts to cool, shift away from a seller's market more towards a balanced and eventually a buyer's market, because remember, everything goes in cycles and we will get there eventually. As we start to see that cooling off, we would expect to see days on market go up, percentage of list price received start to go down, and those are kind of the lagging indicators. The leading indicators that we're keeping an eye on to let us know that we're getting towards more of that type of a market are the numbers up here, new listings and pending sales. So what's really interesting to think about is in the month of January, 1,400 new homes came on the market, but only 500 homes went under contract. So if that continues to happen, our inventory levels are going to rise, which will be more of a shift, and we're going to see days on market continue to inch up. So just some interesting numbers to keep an eye on. Again, we're going to continue to monitor this on a monthly basis. So next, let's talk about mortgage rates real quick and see what's going on that side of things. So this is a 12-month average for both a 30-year and a 15-year mortgage. So what we could see is that towards the end of last year, mortgage rates were going up. All the forecasts, we were hovering around 5% towards the end of last year. All the forecasts were saying that we might see as much as a whole point increase over the course of 2019. However, due to some action that the Fed has taken, the projections are now that rates are going to remain pretty stable throughout the year. We might end up seeing a little bit of an increase. We might actually see a little bit of a decrease over the year. Nobody can say for sure. My crystal ball broke several years ago, so I don't know. But it's just going to be interesting to keep an eye on that. A lot of people were potentially going to be pushed down to the market with rising interest rates, but we're getting a little bit of a reprieve in that category. So right now we've got 30-year rates floating somewhere around the 4.5, and 15-year rates pushing up close to that 4% mark. So I hope this information was valuable for you guys. If you have any questions, please don't hesitate to call or email. We want to make sure that we get you the information you need to make an informed decision. Thanks so much, and we'll see you next time.